Guys, 3 stocks that have hit 52-week highs. Let's check them out right now. First one, Shopify. Mo, Shopify is incredible. Even if you go look at their income statement here, look at this growth here. Look at this growth. 10 years ago, they did $70 million, then 170, 330, 580, all the way up. Last 12 months, Mo, $6.65 billion in revenue growth.
That's a lot of revenue.
That's a lot of revenue. Now we pull up their quarterly numbers. Let's see how much this growth is. So September of 23, 1.7 billion in revenue. September of 22, 1.37. So still some major growth year over year.
Yep.
Shopify is incredible. The question is, Mo, do you think they're making money?
No, I just pulled that up right here. A lot of negatives.
Now the good news is, from a quarterly basis,
it's okay.
But look how up and down this is.
It is.
Mo, look at this. 880 million, 1.1 billion in profit, negative 300, negative 1.5, negative 1.2. Guys,
even look at this one, 2021, 3.4 billion in a positive. Next year.
Well, that was COVID year.
Yeah.
Everybody was buying on there.
Yeah,
Shopify is a great tool. I love it for the internet. I love it for people. But here's one thing I want to show you guys also. They're issuing shares, not a ton, Mo.
Okay, let's go.
But if you look at their yearly, this is their quarterly.
Oh, you're doing quarterly right now?
I'm doing quarterly, and it's still going up. It's not by much, but they're diluting shareholders here.
Okay.
Let's look at their 8 pillars also. Oh, boy.
Yeah.
Okay, cash flow growth is up, which makes a lot of sense.
Right.
Revenue growth is obviously up, makes a lot of sense. Everything else is down.
Right.
It's a doozy here, guys. Now, the good news is they have more cash flow, Mo, than their net income.
That's good.
It's good, great. They could be depreciating, writing things off, etc. But their cash flow is growing. But here's the deal, guys. It's a $105 billion company, and last year's cash flow was $550 million.
Yeah. Look at their enterprise value.
That's almost 200. Oh, enterprise value is 102, which means they have more cash on hand than total debt. Mm-hmm. This difference here is essentially their net debt. So good.
It's a tough one to have a
valuation on.
Yeah.
Because you
have
have
like a confident investment on, you know?
I mean, look at this, Mo. Price to sales ratio, 15.86%. This is a good way to compare companies that aren't generating money. What's their price to sales ratio? Now, here's the deal. I always look at gross profit. Their gross profit is 49% here, okay? So a software business, which is essentially what this is, selling for 15.9 times sales. Now, granted, they have a lot of future growth potential. But you look at a company like Microsoft, Mo. Mm-hmm. Look at Microsoft, which we think is overvalued. Their price to sales ratio is 13.28, and their gross profit is 70%. Now, again, I want to make note, Shopify has a lot of upside potential and growth. Far more growth potential, I would guess, than Microsoft. Mm-hmm. But at some point, it's possible to overpay for a good thing. So for me, I don't understand it enough to feel confident putting a number on it. I don't know what their profitability is going to look like once they are profitable. Right. So I'm just moving on.
Reevaluate at that time.
Yep. Stock number 2, Crowdstrike. This is a cybersecurity company. Again, very much like Shopify, positive free cash flow in the last year, positive 5-year free cash flow, but their net income is down. If that confuses you, that basically means that they're probably writing off a lot of things. Cash flow is money in, money out. Net income has so many different manipulations and this, that, and the other. Look at this, though, Mo. Look at this gross profit margin.
It's big.
But look at their price to sales ratio.
Yeah.
24. It's a $69 billion market cap business that has 860. So it's less. So here are the benefits of Crowdstrike versus Shopify. Lower market cap by about 30%, much higher price to sales ratio, but much higher free cash flow, and a much higher gross profit. Yeah. Are they growing like Shopify? Well, let's pull up the years.
Revenues?
Look at these revenues, Mo.
Pretty good.
170, 405, 760, 1.3, 2 billion, 2.85 billion. Let's look quarter to quarter because we'll see if anything slowed down. Last quarter was ending October 2023, 786 million. October 2022, 580 million. These guys are growing like crazy. That's 60%, that's 50% growth.
So stay on that. Go down to the net income there. I'm going to do net income on the 4-quarter basis, losing money every year. But over there, look at the last 3 quarters.
So look at that. Last 3 quarters, they've been generating some cash. Yep. They've been net income positive here, even though every other quarter was negative.
Now, what about shares?
Shares outstanding. Let's go check this out. Oh, Boise.
Yeah.
All right. It's up about 5% in the last
So they're still
few
diluting
years.
you.
Doesn't look like it's slowing down either, Mo. Guys,
Pretty consistent.
issuing shares is a silent killer for investing. You know, the biggest issue I have with this company is that price to sales ratio. But again, if you feel comfortable, go into our stock analyzer tool, make your assumptions about the future, and figure out what this company is worth to you. My guess is it's probably not worth what it's currently selling for. It's at all-time highs right now, I believe. Oh, no, I'm sorry. It's not. It's currently at 283. The all-time high was November of 2021 at $298 a share.
It's getting there, though.
It is getting there. Final company, Meta. Guys, November 4th, 2022, Meta hit a low of $88 per share. It is now at $374 per share. $374 per share. I believe this is an all-time high.
No, it's just shy of it.
2021 of 384.33. It's right
close.
there.
Yep.
Very, very close. All right, look at this. Market cap, $1 trillion.
They're back
Enterprise value, $1 trillion. Price to sales ratio, 7.8. Not bad. Much lower than the other ones. Gross margin, 79%. Profit margin is actually lower, probably because of Meta. The metaverse takes up a lot of their profit, and they're still crushing it.
They are. Their Oculus app was the #1 app downloaded on Christmas Day for the second year in a row.
Wow.
In the Apple App Store.
Oh, look at this. $37 billion in the last year in free cash flow versus $30 billion in net income.
A lot of cash flow.
It's a lot of cash flow with a high return on invested capital. Let's go check out the 8 pillars on this bad boy. All right, right now on the 8 pillars, and remember, up here is some customized pillars that you can do with our software. But we look here, the only X's here are the valuation metrics. Now, guys, don't think just because these are X's, it means it's not an investable company. No. If you knew for sure Meta was gonna double its profit every year for the next 10 years, you would absolutely put every single dollar you have into that company.
So they've been buying back a lot of shares.
I'm
curious to see what they're gonna do now that their valuations are getting a little bit higher. Do they slow that down?
Well,
do they continue
let's check it out. Let's go to our stock analyzer tool and let's pull up Meta in our history to see what we did last on Meta. This is going to show me what I value Meta at. I put a 9% desired return across the board here, Mo. So I'm putting basically a 9 or 10%, which is the market. I'm saying, hey, listen, if all of these assumptions occur, what's Meta worth to me? I did 5, 8, and 11% revenue growth. How does that sound?
Good. I did 4, 8, and 12.
Okay. Profit margin, I did 24, 28, and 32.
22.5, 26.5, 30.5.
Okay, so Mo was a little bit more conservative. For free cash flow, I did 24, 28, and 32. I kept it the same, even though it's showing a higher free cash flow over 10 years and over the last 1 year.
Yeah, I went higher there. I went 27.5, 29.5, 31.5.
Oh, wow. Okay. Now, PE. What PE and what price to free cash flow will it sell for in 10 years? You have no idea. So you have to sit there and say, what are you willing to pay? I put 17, 20, and 23. Because if it's high return on invested capital and it's moat, it has half the world's people using WhatsApp, Instagram, and Facebook.
Right.
You ain't leaving that thing anytime soon.
It's going to be very hard.
So I put 17, 20, 23, and I put my desired return just to see what it's worth today.
Yeah.
Would you put in, Mo?
I did 18, 21, and 24 for both PE and price to free cash flow, and 10, 12, and 14 for my return.
So again, this is what I think it's worth today. It doesn't mean I'm putting any factor in for margin of safety. I have a low price of 221, a high price of 576, and a middle price of 360. And if I paid today's price and the low assumptions occur, I make about 2.33% return. Middle assumptions occur 8.5%. High assumptions occur 15%. Again, this does not include margin of safety. Mo?
So I have margin of safety, 185 on the low, 429 on the high, and my middle's about $300 a share.
Guys, if you're interested in the software and how it can help you become a better investor, check out our next video.